Hello, I'm Patrick Manzi, Chief Economist with the National Automobile Dealers Association, here to give you a recap of the third quarter of 2022 and an outlook for the rest of the year. New light vehicle sales ended the third quarter with a September SAAR of 13.5 million units. This was up about 9.6% year over year. You may remember that in September 2021, we saw some of the lowest auto sales since the beginning of the pandemic, mainly because we saw inventory levels at their lowest level in over 36 years. With September sales total, that brought the third quarter average SAAR to around 13.3 million units, roughly flat with the second quarter. We do expect, though, that we're going to see some improvement in sales volumes in the final quarter of the year. Now, during the third quarter, we saw sales of alternative fuel vehicles grow. Battery electric vehicles market share grew to 5.1%, its highest market share to date, and up from about 2.7% through the same period last year. Also through the third quarter, franchise dealers sold about 175,000 of those battery electric vehicles. That's more than their full year total in all of 2021. That means that franchise dealers control about 34% of the battery electric vehicle market. At the end of the third quarter, we actually saw some significant improvements to inventory on the ground and in transit. At the end of September, inventory totaled 1.43 million units, the second straight month of above 10% growth, and up more than 40% compared to the start of the year. New light vehicle transaction prices also continued to rise during the third quarter of the year. According to J.D. Power, the third quarter average new vehicle transaction price expected to come in just below $46,000. Now, prices have been rising this whole year because manufacturers have been producing a richer mix of higher trimmed vehicles, and they've also cut incentive spending dramatically given the strong demand for vehicles and the tight supply. According to J.D. Power, average incentive spending per unit is expected to be below $1,000 per copy for the fifth straight month in a row, and we don't expect there will be any change in incentive spending before the end of the year. Average monthly payments in September are also expected to be above $700 for the third straight month. Payments have been rising recently as interest rates have continued to climb in response to the Fed increasing the federal funds rate. At the end of September, the average interest rate on a new vehicle finance contract is forecast to be 5.7%. This is notable because it's the first month where the average interest rate is above its pre-pandemic level. This is also true for used vehicle finance contract rates as well, and they're only going to rise higher before the year ends, as the Fed has indicated that they're going to push rates even higher at their final two meetings this year. According to the Manheim Used Vehicle Value Index, prices for used vehicles sold at wholesale auctions have fallen for 5 straight months. Now, while prices have fallen, they are still well above their pre-pandemic levels, and we expect that when they do reach a new floor, that floor is going to be well above its pre-pandemic level. Now, despite the good news on inventory, we still don't think we're going to see enough sales to reach our previous sales forecast of 14.2 million units. In fact, we revised our sales forecast down just slightly, and we now expect that new light vehicle sales are going to total 13.8 million units in 2020. The U.S. labor market finally gained back enough jobs to surpass its pre-pandemic total. And at the end of August, the total labor market was 240,000 jobs higher than February of 2020. Now, even though we've seen all of these job gains, the distribution of jobs isn't exactly the same. There are still sectors like leisure and hospitality and government, specifically employment in schools, that still have a long way to go before they're fully recovered. Now, employers have had to pay a lot more to recruit workers to come to work for them. Average hourly earnings are up 5.2% year over year, more than double the long-term average of 2.5%. But still, even with these strong wage gains, real average hourly earnings have been negative for the past year. Now, this has really affected consumers' spending power, leading many consumers to believe that their standard of living is actually decreasing. And this has been reflected in the consumer sentiment numbers that we've seen out there, which, while they've improved from their lows seen earlier this summer, still remain very low given the high prices throughout the economy. And certainly, inflation across the economy continues to be a major issue. According to the Commerce Department's Personal Consumption Expenditures Price Index, overall inflation increased by about 6.2% in August. Now, digging into the core metric, which excludes volatile food and energy prices, that metric was below 5%, but it did increase from July to August. Currently, the targeted range of the Fed funds rate is 3% to 3.25%, but the Fed has indicated that they're going to hike rates at its 2 remaining meetings in 2022, and we expect that the Fed funds rate is going to be over 4% by the end of the year. According to the Federal Reserve Bank of Atlanta's GDP Now indicator, growth in the third quarter is forecast to be 2.4%. Now, this is very notable considering we've had 2 consecutive quarters of economic contraction. And we do expect still, though, that for the whole year, we're going to still see some positive growth. Our forecast for real GDP growth in 2022 is a range of 1 to 1.5%. And then looking out to 2023, we do expect that growth is going to slow, but it's still going to remain positive at about 0.3%. Given the good news on increasing inventory levels in recent months, we are very optimistic that 2022 is going to be another great year for America's franchise dealers.